your money masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters here. I'm Steve Rhodes. Tom is not able to be with us this morning, so I will just carry the torch for us. There's going to be some Summer Olympics not too far in the distant future. Right now, you got the Dow trading down 55 points, S&P's off 10, Composite off 27, Small Caps off 7, New York Stock Exchange down 49 points, NDX off 23 points, King Dollar pulling back just slightly right now, down 11 ticks, gold off $6, trading out at $15.56, silver off 36 cents, out at $27.62. Our call-in number here, folks, 877-927-6648. Would love to hear from you. Give us a call. We can take a look at anything that you'd like. Before we go to the numbers out here, if I mention the name Ben Franklin, what is it that you think of? You know, I know most people think of the lightning bolt, right? Now, the lightning bolt, I call that buying and selling the D point because you got A, B equals C, D. That's a lightning bolt pattern, but that's not it. Most people think of Ben Franklin as just simply flying the kite and just simply the lightning bolt, right? But did you realize in 1732, fun fact here, 1732, that he created the Poor Richard Almanac? Did you know that? Probably some of you folks did. Now, here's what's more important that maybe you didn't realize. Ben Franklin was the original Mr. Beeks. You know, in between, I'm just kidding. He was, but in between the space and the Poor Richard Almanac, you can go look this up. If you go take a look at the space in between the crop data and the weather forecast, what he would do is he would insert clever bits of advice. So that's what I like to be able to do. I do that each morning when I kick off the Trader's Edge show. You can catch that show. That's from 9 to 10. You can always catch the archive of that show on Channel 9. Here you can catch the archive of the Money Master show on Channel 10. You can always watch us on Tiger TV, folks. Just go to the homepage at tfnn.com, click on Tiger TV, watch us live, or you can bookmark it on your device. Over on the right-hand side is a little area there where you can just click on that, and then you can bookmark you can go ahead and bookmark the so that we're just one touch away to be able to get to Tiger TV. And I want to be able to show you charts, so if you're listening in, we absolutely appreciate that. I want to be able to show you chart patterns that are out there, A, B, C, D points. I want to give you some Ben Franklin clever bits of advice. All this stuff certainly doesn't come from me. It's because I like to read, and leaders are readers. That was the quote that I gave in this morning's opening session. So if we take a look at clever bits of advice, there's a couple things that there's many things that Ben Franklin said that I think are pretty cool. Number one, he said, diligence, folks, diligence is the mother of all good luck. Think about that. You should write that down, folks. Diligence is the mother of good luck. What he also said it's amazing, and you know this to be true. He said it's absolutely amazing how hardworking, intelligent people have all the luck. How hard is it that you work? Do you do your best, folks? You know, because when you do your best, that actually means you can actually do a little bit better. You can always stretch a little bit more. You can always learn a little bit more. That's what it's all about. And so it's amazing how hardworking, intelligent people have all the good luck. Isn't that amazing, folks? Now, success, the other thing is, and I'm just going to leave you with a couple things. Success doesn't come from one big thing. He's got kind of like a formula. Everybody has secret sauces, not just McDonald's, but you've got a secret sauce. One of Ben Franklin's secret sauces was simply success quotes, if you will. And success was really not about one large thing happening to you. What success is all about is a number of small things that just are consistent and continue to build up and continue to build up. So if you're looking for success, you're looking for that one big thing, you're looking in the wrong spot. You've probably had many successes in your life. Make sure you go put those down on a pad of paper. You should have those on your note. You should have those on your phone. You got that little memo section. You should list your entire life of all your great successes out there. Because if you ever have a day when you're not feeling well, just turn to your success journal. Just go take a look at what it is that you've accomplished down your journey, down your road. It's also, and if you go take a look at that, you've probably learned that life is not rigid. You need to mold yourself each and every day, just like maybe some silly putty, if you will. You want to be able to mold yourself. Do not be rigid in your rules when you're trading the stock market, but I want you to be able to mold yourself. I want you to be able to gather more knowledge, more information. And lastly, what Ben Franklin said was success is pleasure. And what he really meant by that, or what I believe he meant by that, is he said, is to be happy along the way. You got a choice in life. You always have two choices, at least two choices. You can be happy, you can be sad. I say choose to be happy. It's real simple. You can focus on the negative. You can focus on the positive. Be aware of the negative. Focus on the positive, because where your focus grows is where all your energy goes, folks. So be happy along the way. Go ahead and pat yourself on the back. If you haven't done that lately, just take your right hand out and reach it up over your left shoulder and pat yourself on the back. If nobody's done that, you need to do that for yourself and absolutely be proud of yourself. So that is all courtesy of Ben Franklin. So now let's go take a look at the markets. Let's go see what it is that we have going on out here. What I do have up on my screen is I've got the Qs, the 10-minute chart out here on the Qs. So let's go take a look at the chart patterns out here. We're just going to start from Scratchola. Scratchola says we're going to look at an AB equals CD that's unfolding here. That A to B equals CD point we take a look at. And this is just the 10-minute chart, folks. You can do this intraday. You can do it on any time frame, any chart pattern. The B point here we'd be looking at is at 9:50 yesterday morning. You did, not you, but you know when I say you know I'm talking about the Qs or whatever chart we're looking at. The Qs here, though, on the 10-minute chart did 2.2 million shares as it got down to $61.94. What are we going to do? We're going to take our line tool out here. We're going to draw it across the board, and that is going to be our line to go take a look at price and volume. So we're going to see as you passed, you again, there we go with your U's. So it's the Qs, the U's, the Qs. How about that? So we take a look at the Qs, and as the Qs were crossing that swing point, it was doing it with wide price spread and what, folks? Accelerated volume. What's that set up? That sets up an A to B equals CD down. Your A point is going to be this little shooting star out here at 1040. Came in yesterday, 1040. No, I'm sorry, not yesterday, on the 29th at 1040. Why do you want to know your shooting stars? Well, you want to know that because those are reversal candles out there. There was probably an A to B equals CD up pattern that was in place. In fact, there was. I can just go ahead and divert and draw that in here. Since there's no callers on the line, Stevie can do whatever he wants. Now, there we go. So there's an A to B equals CD pattern up at the shooting star. Let's take a look at the ABCD pattern on the way down. We're going to start at 63.15. That's the high out there. Our B point, again, their B point was at 950, 2.2 million shares, low of 61.94. Our C point looks like it's going to be at 2:30 in the afternoon on the 30th. That high, 62.55. Let's just check it out. We should be perfect here. 62.55. That is the number. Again, that was at 2:30. You did 1.2 million shares. Let's go take a look at that retracement from A to B. What type of retracement was that? C was that B to a C? That was just under. It was about a 50% retracement. Wasn't all the way up 2.618 and was just above the 0.382 area. What's that set up? That sets up at least a 1-to-1 A to B equals CD. That says that the Qs want to trade down to 61.34, potentially 61.01. How will you know where the Qs want to stop? Well, the candles will absolutely light the way. That's the great thing about candles out there. 61.34 gives you a move, 100% move, takes you back to the 12-10 time frame yesterday. You're looking at 61.37. So you've got a confirmed A to B equals CD down on the 5-minute, on the 10-minute chart out there on the Qs. That was for Angie in the den. 877-927-6648. Let's go take a look at the King here, folks. Let's go take a look at King Dollar. King Dollar yesterday making a 1.272 butterfly sell pattern. It is trading just slightly lower, made a high out there of 83.18, 83.19 actually in the overnight section is the high, trading out at 83.05. Looks like the King may not want to back off. If the 1.272, you get a close above this 83.19 area, and I don't mean like 83.20, you know, I mean something more significant, then that says that the King wants to go do the 1.618 butterfly sell pattern. That is the beautiful thing about having your back up against the wall, because the market is going to go ahead and release information to you. So if the King goes ahead and fails here, wants to move up to the next level, then it's going to head to the 84.47 mark. That would be a 1.618 Gartley sell pattern. What else do we have up there? Well, I don't know. Let's go take a look. What you have up there is actually not too much to stop you from then moving all the way to your high. So the King is really at a critical stage. So let's put this up on a weekly chart. Let's go look at the weekly chart of King Dollar. And what I'm talking about here, folks, I'm talking about the swing point that is the last bastion of resistance, which really is August 27th, 2010. That doesn't surprise me. It's at August 24th area, August 25th, which was a key swing point area. inside the euro. That obviously is, since the euro is the primary currency inside the basket of 6 currencies inside the U.S. dollar index out here. So you're trading out at 83, you're trading at 83.03, 83.64 being that swing point high. Again, you have traded up as high as 83.19. What happens when you get above a swing point, folks? You drift up or you move up to the next swing point. Well, on the weekly chart, that takes you all the way back to June 2010. That gets up into the $89.10 area. Until the correlation goes away, the market will absolutely have conniptions. Now, if you take a look at ABCD patterns out there, weekly ABCD patterns, we would start off with the low May 6, 2011, when our markets were making their highs. Your B point would be January 13th at the 82.04 level. Your C point would be all the way down here at March the 2nd, and it's not that far down. That is probably only about a 0.382 retracement. That takes you A to B equals C to D up to 87.31. Let's go see what type of retracement we had on the weekly chart, and because that's going to give us an idea for what type of momentum it has. That was a 0.382 retracement. What that really says, folks, that says that where the King Dollar wants to move to is the 1 to 1.272. That is 89.79. Well, folks, that takes you up to 89.10. That is the swing point high, June of 2010. That's where the King is headed, but it may be taking a little bit of a breather, at least for a day or two. But it's all going to be about this chart here. It's all going to be about the Euro chart. Let's go take a look at the Euro chart on the daily basis. Let's go see what this is doing here today. Today, holding the butterfly buy pattern that completed yesterday. So the euro trading at 1.23884. What's that say, folks? That says that the move right now downside is likely not real, that you will see some type of relief bounce here, and that's all that it really is. If we go take a look around the world, see how the charts around the world are trading. Well, you got the DAX. The DAX actually giving it up. You got the DAX trading down 44.70 right now, close to its session lows. Session lows on the DAX being down at 62.25. It's trading out right now at 62.35, so not that far off. The DAX breaking through the October 28th area and breaking out of this uptrend channel. This, folks, the question is this going to be a real break, or is this a false break to the bottom? But this would be a break, folks. You break to the upside. That's not a real break in an uptrend channel. Your break is to the downside. 877-927-6648. Dow off 50. S&P's off 9. Give us a call, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. Let you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now,
yeah.
Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow off 56, S&P's off 9. And somebody said, hey, Steve, how did you come up with the idea? Why did you start talking about Ben Franklin this morning? Well, it's simple because his great-great-great-great-great-grandson, C.E. Franklin, decided to go ahead and sell his company to National Oil Well Varco. Their ticker symbol, CFK, trading up 34% right now. I hope that you're in on that trade. That's trading up $3.15 last 12.22 was the trade. The buyout price looks like it's going to be $12.75 a share. And so that gave me the thought on talking about good old Ben Franklin. So let's move over to Japan, though, now, folks. Let's go try to put together a couple of a trade out here. Really, two trades out here. So what I've got up on my screen, if you're watching on Tiger TV, is I've got the Nikkei. And the Nikkei, folks, if you've been listening to Tom and I, have been pointing out the Nikkei wants to travel down into the November 25th area. Nikkei last night closing out at 85.42.73 at the top of its session. However, it did gap down yesterday. It had traded last night. It traded to a low. I say last night. For us, it was early this morning. Got down to a low of 84.55, again, closing out at 85.42. The Nikkei wants to trade lower. It's below the 0.786 area. It's going to make a 1 to 1.618. A to B equals CD, even a little bit lower. I believe that the Nikkei wants to get down to November 25th. That would be the price point of 81.3579. If we don't see a bullish sign there, well, then it will turn into a butterfly pattern. But right now, that's where the Nikkei wants to travel to. Now we know where the Nikkei wants to travel to. Let's go put it together with the currency piece, because you got to understand where the currencies are trading. So now we're going to go take a look at the Japanese yen. Closing trading out right now at 78.49. It is making an A to B equals CD down. The 1-to-1 takes it to 77.89. That would be also the 0.786 retracement area. There is a better chance than not that actually the Japanese yen, which would be amazing, may want to trade all the way back to the February 1st lows. It's that 0.786 area where we're going to have to be watching for a bullish sign, a bullish signal, bullish candle pattern of sorts to occur right in that 77 and change area. If we don't see that, then it's going to be in the 76.83, and really what that sets up is coming all the way back. Now, why do I say... Now, it's really important to understand that when the Japanese finance ministers have intervened into the yen a couple different times here, that we know of, where they simply took out the bullhorn and broadcasted to everybody that they were going to go ahead and intervene. The first time that occurred was back in August 2011, August 3rd to be exact. You had a low of 76.91, traded up to $80.23. You want to talk about big bucks being made if you were long the yen back then. Then you had the next one that came in as the yen was going back to all-time lows in October of 2011, October 31st. That was the day exactly, was a low of 75.56, traded up to 79.52. Man, oh man, they did a good job there. But of course, the market just simply pulled back in both of those instances. So, what can you learn from that? Third time's a charm, right? Well, if you do hear that the Japanese yen or the Japanese finance ministers are going to intervene, and you have a one-day wonder, which is all that you had back then, what would you do after playing that one-day wonder? That's right, you would bug out, because that hasn't worked in the past. Now, the yen had a terrific run, and not that the Japanese finance ministers may not have intervened here, but had a terrific A to B leg. That A to B leg, folks, taking you from the low of 76 and change all the way up to the 84 area. I've been waiting. What's happening here is nothing more than an AB equals CD down pattern, and I've been waiting for this the 77 and change area, the 0.786 area, to be hit. So now you take a look at and you want to time this with the Nikkei, with the yen out there. It's all about putting a trade together. What's that trade that we've been talking about? Well, we have been talking about Sony. So if I come over and take a look at SNE, and what I do have up on the screen here is the monthly chart, traded out at 13.14. Unfortunately, my chart data only goes back to 1990. And so there is data that goes back before then, and it is trading, if you go back to 1990, trading under all of its lows. But I do know that the chart goes back further in time. So where is Sony likely headed to? Well, I would say based on what I'm looking at inside the Nikkei, based on what I'm looking at inside the yen, and I'm glad you asked me that question, looks to me like Sony wants to get down to $9, $8.89 or so. You don't jump in at that stage until you see some type of bullish candle configuration, at least on the daily chart. So that's going all the way over to Asia. And why? I believe it's Thursday. I believe in the United States it's Saki Thursday, folks. 877-927-6648. And the Dow off 48 points right now. S&P's off 8. Apple down $4.68. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, first Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Got the Dow off 56 points, S&P's off 10, and we're going to go up and get a report on the New Jersey Devils. We're going up to Dan in Basking Ridge, New Jersey. Dan, thanks for calling. Thanks for holding.
What's going on, brother?
How you doing today?
All right. Hey, I had actually I got in the TZA on Wednesday morning.
Okay.
It pulled back to, I had limits in, pulled back to like 2070, and I filled my limits.
What price are you in at?
Well, I got out yesterday afternoon.
Okay.
You know, so I got in at 2070 and got out at about 2160.
I like it. Let's pat Dan on the back here, folks. Nice trade. I like that.
Well, you know what? I didn't expect today to come through because I didn't think the juice was in it.
Yeah.
To go through 22.
Yes.
But you know, basically, I wanted to get your expertise on trying to get back into get an entry point back on TZA. I figured, you know.
Yeah. No. So, do you typically trade it on a intraday basis? I mean,
no, sir.
Okay. So you're more looking for a longer term.
Yeah. You swing trade up to 10 days.
Okay. Because that helps me to figure out where to focus your focus. So if you're taking a look at more of a swing trade, then right now what you have to do is you have to sit tight and be patient and wait for the market to reveal some information to you. And what I mean by that, any chance that you're watching this on Tiger TV?
Not right now, but
okay.
I typically do.
Okay, and you can always catch the archive of this. So you can go to the Channel 10 Tiger TV and you can catch the archive of this show. So right now, if we take a look at the IWM, folks, that's what I've got up on my screen. We're looking at the daily chart. And the daily chart swing point low that we're taking a look at, let's take a look at, so the low that's out here from May 18th got down to 74.49. You got just a little bit lower the following trading session, 74.41. So if we take a look at either of those 2 days, let's take a look at the first day, May 18th, 77 million shares as it was moving down. Yesterday, and I think it did the right thing, yesterday as it was moving down, did 47 million shares. 47 million shares. It didn't make it all the way down there, so it didn't test the swing point. Obviously, now, when I say didn't test the swing point, you could argue that the real swing point really is May 21st, and you were inside there. That had 61 million shares, and that could say, okay, you're in there. You'll go test the the bottom of that area. The bottom being 74.41. I wouldn't step in. I wouldn't chase a TZA here right now.
Right.
I would let the market go ahead and prove it, meaning get below 74.41 and do it with more than 61 million shares. That would be the place. I would pay a higher price to have the market, because right now you're kind of in the middle of going up the stairway or down the stairway, and you're not sure which one just yet. Because
right.
as you said, you pointed out perfectly, and I congratulate you for that. It did not have as you said, the juice on the way down yesterday. 47 million shares is not going to take out 66, and it's not going to take out 77 million shares. Today, you have been trading for a little over an hour, and you got 15 million shares. So today you've got some energy, at least in the first hour. That would equate to maybe about a 90 million share day. So you could have the energy today, and today may be that period where it releases that information to you. But now what we'd have to do is switch over to the 10-minute chart and take a look at, what's going on volume pattern-wise. And volume pattern-wise here, as it's starting to pull back a little bit. And on the intraday chart, on just the 30-minute chart out here, what the IWM did, Dan, was it pulled back to the 0.786 area. That price was 75.16. It got down to a low of 75.07. Looks to me like it still has a little work to go, maybe to get to 74.81 as the area. But right now it's in the process of creating a bullish engulfing candle. So now that session doesn't end for another, it's 10:38, so another 22 minutes or so. So, coming into the close of this show, we'll have an idea, but you won't get a confirmation of whether that low has been put in at that 0.786 area until really the next half hour. That's on the half-hour chart. So, and what you've also got to be aware of is what's going on inside the currency marketplace, because it really is all about the currency marketplace, the dollar index making a 1.272 butterfly sell pattern that says that the market wants to bounce. And so I would just, now that doesn't look, it's the dollar index, controlled by the queen be that euro. And so the euro could just give way, and at which time what I would do is, as I would enter on the IWM, I would wait for it to prove itself and get below that next set of swing points out there on the daily basis. You'll pay more, but you always want to pay for information, don't you?
Right.
So now what I would also do, if you're trading on the longer term basis, if you haven't tried it, go over to the homepage at tfnn.com, and in the carousel, you will see an area that says position size calculator. And what I want you to do is I want you to download that. You can have that for 30 days for free. And what that helps you to do is to set up your trade in the TZA. In fact, I'll put up the TZA right now. And when you are entering a trade, especially a swing trade, what you don't want to do is you don't want to get stopped out. You don't want to have too tight of a stop. You see, in a real volatile marketplace, a lot of times what people will say is, I need to make a tight stop. To me, that is absolutely the wrong thing to do. And the reason is with it being volatile, just the normal breathing, the normal daily pattern could knock you out of the trade. So I don't want you to put your money at risk and have too tight of a stop. And what the position size calculator does for you automatically, once you put in the instrument and you hit search, it'll tell you what the average daily range is. On the TZA, it's $1.21. So if you get in on a trade, if you're going to get in on a trade right now today, your stop would have to be outside of $1.21 just to not let the daily noise take you out of the trade. Does that make sense?
Yeah.
So I'd absolutely want you to do that. Use this because this will tell you, based on the capital that you're trading, exactly how many shares you should buy, and this will also calculate for you what your stop should be. And so I want what I use during very volatile periods is I use 1.618 as an expansion of what that average true range is. That means if it's $1.21, it means I'm taking $1.21 times 1.618, and that's going to be my stop. And I'm going to go back and take a look and see, where the swing points are. But, I'm a firm believer, don't enter a trade and be inside the daily range just to get knocked out of it. Your money's you work too hard for your money. Make your money work hard for you, too.
All right. Now, on the upside, say if we get a swing up to, you figure 78 would be a good time to step in. If we get a bounce, 78 might be a time to also step back in.
So if we go back over to the IWM, the first thing that it's trying to do, I would go to 78.41, which is March 6th, and that would be the logical spot for the IWM to move to. Now the IWM has made an ABC down pattern. That A point, let's go take a look at it, was the highs that came in on March the 27th up at 84.66, and it did a 1 to 1.272 A to B equals CD. So if there's not enough volume to push down, here's what I'm really thinking on the IWM. Even though that March 6 area, that 84 area makes sense, I think what we're likely in is right now just a consolidation period here. It doesn't have enough to bust it up, and it doesn't have enough to bust it down. And so your next area of information is going to become, if the market does bounce from here, is what happens when the IWM gets into the May 29th swing point, which has 51 million shares. And that low is 76.76, and the high is 77.91. If you get inside there, close inside there, come inside there with more than 51 million shares, that then sets up your low of 78.41. Otherwise, you would consider firing away right at about the 77.91 mark.
Beautiful.
Okay.
Beautiful. Thanks, Steve.
And my pleasure. Have a great. Hey, are you a Devil fan, by the way?
You know something? I don't follow sports that much.
Oh,
but
well.
You know what I do? Run down to the Jersey Shore and do some surf casting.
Oh, do you really? Oh,
yeah.
That's great. Now, when was the last time you were out there?
Not soon enough. Last season.
Okay. Well, summer's here, right?
That's it.
All right. Hey, thanks for calling, Dan. Look forward to speaking to you again soon.
Take care.
All righty. Let's go to Mark in Denver. Mark, thanks for calling. Thanks for holding.
Hey, how you doing?
I'm doing great. Yourself?
Great.
What did you want to look at?
Well, I've been holding on to some SPXU, which is the ultra short S&P 500. Got about a 8-point gain on that thing.
Very nice.
And I'm looking to flip that into something. I've been really patiently watching the TBT.
Okay.
That's got to be due for a bounce here, but I wonder what your thoughts are on that.
So you've got you got 8 points. So on the SPXU, it's traded out at 55 right now, and so you've got a nice trade going on there, and you're going to flip the whole thing out, or?
Yeah, it's not a big position. It's just kind of a trading, kind of fun position to swing trade with, and I'm just trying to get a feel for it. It looks like that could potentially do an ABC up at some point, but I don't know if it's really ready yet.
Yeah,
it would have to break 57 on more than 4.5 million.
Yes,
it's got actually quite a bit of volume today.
It does.
So it has the potential, if for something were to fall apart, it could get into that, but I guess I was going to kind of keep an eye on that.
Yeah, I would, because right now, the markets, and as you know, you've got a great read. You're inside that swing point from May 18th. Only 4 million shares. Now you'd want to go see what's going on inside the SPYs as well. But as you said, only an hour and 15 minutes into trading, you've got 2.4 million shares that have traded hands so far. So that could be a huge ABC up, by the way.
Right.
So if it does break that, then what you're really looking at here is a trade that'll take you up to $69.
Right.
And you're at 55 right now. But I will help answer your question about the bond trade or the TBT. So if you take a look at the TBT or the TLT, what you've got to do is you've got to, if you can, take it off of the 20-year Treasury bond, because that is the underlying instrument of the TBT and the TLT. And right now, today, the TBT, or the 20-year bond is trading out at 135.010. It's trading up at the high of its session. That's also 1 to 2.618, A to B equals CD. But you've got to wait for, as these levels get hit, you have to wait for some type of reversal signal. And there ain't one anywhere. It's hard to believe, but there's no reverse. I have not seen a reversal candle since the 20-year bond started its move up off of the March 20th low when it was out at the 127 area. And there's just not on a single day has there been any reversal candle signal. Maybe one. I could come up with possibly one, and that would have been May 10th, and that candle signal said you had to wait to May 11th, and on May 11th, it said, nah, that was a false candle signal, and so there just hasn't been one. And so
it looks like the TLT is confirmed in ABC up, but I'm trying to figure out where that's going to end.
Well, that's the thing, that's why it's easier to look at the actual bond, because, and I'll pull up the TLT. And the problem with taking a look at the TLT and making your trading decisions is that if you use just normal decisions like gaps and so forth, you're missing out on all the activity overnight of what really went on inside the bond. But look, the TLT broke out. I mean, it absolutely did. And the question of where that's going to end, it's going to be really dependent on that 20-year bond. And that's going to give you in my opinion, that's what's going to give you your signal. But you're going to have to wait for some type of bearish candle signal out there, and it has not happened yet.
Okay.
So from a trade standpoint, you've got the SPXU that's working. Maybe what you do is you just simply, you tighten your stop on that. Or something, and let the market take you out. But I would not reverse those trades. I'd rather be long the TLT right now than short the bonds. But I would not suggest going long the bonds up at these levels either.
Yeah, I mean, I've got my my stop set on that SPXU at that last swing, which was like 51.59ish, so just a little bit under that.
Let's see here. I'm going to pull that up here. SPXU. I'm actually go down on the intraday basis so we can take a look at volume also on intraday. So your stop right now. Oops. God. Well, give me a second here. My screen just kind of messed up.
About 51.49, which is just below the low swing candle on the 29th.
Got it. Okay. So actually, if I pull up the SPXU, so we can do is you can also take a look at what the average daily trading range is on this. So on SPXU, your average daily trading range is $2.12.
Right.
So you could I would start with $2.12 and maybe some either 1.272 multiplier or 1.618 multiplier of that as well. If you wanted to, if you wanted to use that kind of as a trailing stop method in addition to a swing point, that way you don't have to give back too much of it, and you can just simply take a look at that. If we take a look at intraday, if I just go down, I'll go down to two levels for you. One will be the 30-minute chart. See if that pops up here. Oh, this had a reverse split, right?
Yeah, it was trading in the 10-11.
Range. So now it just makes it a little bit harder for me. Where's my adjust my split? And there we go. Okay, so the other spot would be to tuck it underneath from a 30-minute chart, to tuck it underneath the 54.13 area. That's the last time that you had some volume in there. So hopefully that helps you out, Mark.
That does. Thank you.
Okay, you bet. Have a great day. 877-927-6648. Dow off 82 points right now. S&P's off 12. Composite down 31. Apple off 450. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV
Great
and
Basin
Hollywood.
Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa, with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010, with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back to the Money Masters Show, folks. Thanks for joining me. I'm Steve Rhodes, your co-host in here, filling in for both Tom and myself. And stay tuned, because you've got Kate Stalter. We go all the way out to Santa Fe, and then from 12 to 1 up to Tucson, Arizona. Only we're not going to go to Tucson today. Larry is going to be coming to us live from some other sweet spot in the country. That's from 12 to 1. 3 to 4, we go out to California. Mr. Ken Shreve, the warm-up band for the Tom O'Brien Show, and Mr. Basil Chapman will be hitting the ball out of the park from 4 to 6 today, filling in for Tom. Now, folks, I absolutely take my business, I take the business of what it is that I'm doing here extremely seriously. And if you listen to me, or maybe you've heard me fill in for Tom and do some of his shows several weeks ago, what I was doing was riding through the town, screaming out to all the folks out there that had long-term. I am not a believer in buy and hold. I'm not a believer in riding the markets down. I do believe that the markets give you signals when to stay in, when to stay out. And what I'm talking about is on long-term as well as short-term, intermediate term. But I'm specifically talking to the folks that have got long-term retirement 401k monies that are out there. I do not believe, and I can prove it to you, and there's going to be a special report. I don't know if we're going to be able to get it out this week, but I went back and I've done a study, and to me, it's all about being objective. And that's what you can use some of these indicators for, about being objective, and you just simply follow a disciplined trading approach to the markets. And what I did was went back to the 1928-29 crash inside the Dow, and I took a look at a buy and hold strategy and invested $10,000, and buy and hold, and with $10,000 brought you to about a little over $500,000 today, if that's what you did. Also, if you followed my indicator, because it's a little tweak to some indicators that are already out there, if you followed my indicator and you exited the market when that indicator told you to exit, that $10,000 today is worth $6.3 million or so. Also, that indicator would have you out of the market. That is why I was out there screaming to folks to go to cash in your long-term funds right now. There's chop inside the market. It's going up, it's going down, and it's no time to have your money exposed, especially when you don't really have the opportunity to do anything until the end of the day. You can't go short the market. Now is time to have your nest egg on the sidelines. You want no more cracks inside that nest egg. I don't mind if I'm wrong. If the market just takes off, you can get back in. The worry is about, and it's always about being able to protect your capital out there. Well, if you did have a strategy, if you did have self-managed funds and you exited the market and went to cash, or instead of just going to cash, you went short the market, when I got the indicator signal there, folks, that $10,000 turns out to be $26 million today. And so I am out here screaming at the top of my lungs, even though it's just a little nice pat on the back, and for most folks out there, 70% of the public has got $100,000 or more inside their retirement funds, and they don't have the knowledge. They might listen to shows like this, CNBC, others, or what have you. For me, it's black and white. It's really simple. It's when this indicator tells you to close out your trades, that is what you do. And so I would really suggest, folks, that you go take a look at those plans. You don't sit there and hope and pray. You wait for the next signal to go long. It is not there right now. Be in cash with those funds. Please do that on a longer-term basis. We're taking a look at the New York Stock Exchange out here. This is the better breadth of what is going on in the market. It's oftentimes overlooked, but it is, in my opinion, it is the most important index to really be taking a look at. It's not about the Dow 30 stocks. Are you kidding me? It's certainly the S&P 500 is a little bit better, but it's not about the NDX 100 where you got one stock like Apple that can represent, I don't know what it is, 14%, 15%, or what have you. That is not the place to be. In this case here, the New York Stock Exchange is also trading inside the October 31st swing point after making a bearish engulfing last month with absolute follow-through this month, folks. Thanks for being here. I'll see you tomorrow at 9 a.m.-ish. Stay tuned for Kate Stalter, then up to Larry Pesavento. Have a great day, folks. I look forward to seeing you again soon. Take care.